Good afternoon, everybody that are in stager land. How are you? Shel Brodnax here with Real Estate Staging Association. I am so grateful that you took the time today to be able to join us on this very special webinar, Insurance for Home Stagers, Contracts, Subcontractor Agreements, and COVID-19. We've got a lot to discuss today, but first I need some help from you all out there who are listening. If you can type in the chat box that yes, you can hear me and yes, you can see us. Anybody at all? Hey, Nicole from Sacramento. That's my personal stager, everybody. Go ahead and just type in that box for me that yes, you hear us and yes, you can see us. That way we know everything is working correctly and then we can get going. So I hear a lot of yeses. Okay, thank you, Robin, Sabrina. Okay, got a whole bunch of them. So I just want to take a moment to say thank you for taking time today, although I'm pretty sure not a whole lot of people are staging right now due to COVID-19. So we appreciate you taking your afternoon to be able to jump on a webinar and get some great information and facts. So we're going to go ahead and get started. Just so everybody knows, this is recorded. We do send this out to RESA members that were unable, or actually anybody who's a RESA member that is on this webinar today will get a copy of it. It usually takes about 4 or 5 days to be able to get that out. So we appreciate your patience while my tech team does that. So first and foremost, I would like to take a moment and introduce Judy Phobes. Judy and I have known each other for 10 years, 10 years, somewhere around there. Judy Phobes, I will just have to say, everybody, she is the most educated real estate or educated insurance broker on the planet. Not just the United States, entire planet, the globe, people. Everything that's sitting around in a sickness right now, this woman's got it going on. She has written more staging policies than anybody else on the planet. Yes, I mean it. This is not a hyperbole suggestion that I'm talking about. This is straight up facts. And it is through her work and the work with RESA that we've partnered together over the last decade to bring amazing insurance products to you. So Judy, welcome.
Thank you.
Certainly appreciate it. Now, everybody knows Judy for the last decade for Penex Insurance, and Penex is now VillaNova Insurance Partners. And with Judy, because she is one smart cookie, she has brought us two amazing people into my life and now in your lives, and we're so happy. So first, I'd like to introduce Joe Denneler. Joe, hello.
Hello.
Nice for you to be here. Now, Joe, you are an attorney.
Yes, I am, and thankfully, I'm far away from anybody to able to throw things at me. I'm actually a good attorney. I only defend professionals, but yeah, for the last 22 years, I've been a litigator, and I look at real estate professional claims across the country. And now, through our program and through our captive insurance company, I manage all those claims. Beautiful.
And just for the record, I adore attorneys, especially civil litigators. I actually used to date one, had a lot of great conversation back in the day. And we also have Victor D'Angelo. Victor, thank you for joining us and welcome.
Thank you, Shel. Thanks for having us.
Now,
Thanks
Victor,
for putting it together.
I actually just have to ask you, Victor, are you also an attorney?
I am not.
You are not. I thought you were for some reason.
No. My background is in insurance. I'm the COO of VillaNova Insurance Partners. And for this particular program, Judy and I met about a year ago when we combined forces, and I'm the program manager, so I do all the background stuff, support for both Judy and Joe, and the marketing piece and all the service aspect.
Beautiful. So I've been so excited for this team to be able to come together because we've got a great new program to be able to show you and to talk about. The RESASURE program. It's going to just blow everybody's minds. This is just the best thing since sliced bread. I'm absolutely horribly impressed by the entire team here that's put it together. So the way this webinars works, if you haven't been on one before, if you're a first timer, thank you for joining us again. And what we're going to do is we're just going to go slide by slide, and they're going to talk about everything. If you have a question that's pertinent to the information that they're sharing at the time, go ahead and throw that in that chat box, and we will manage that chat box. And we will answer your questions, one, as we go. And two, if they see a question and they know it's in a few more slides that they're going to get to it, just hang tight because they will get to that. And then at the very end, we will open this up for even more questions, and then we'll stay on to make sure that everybody's got their questions covered. That's it for my part for right now. I'm going to turn it over to y'all and welcome, and let's make this happen.
Judy, I'm very impressed with all the love you're getting on the chat there. It's Judy Nation out there.
I know. I'll send you guys all your $10 later. No, thank you. I appreciate it. It's great. Everybody's wonderful. I love, I love all you guys at RESA. So I'm up first, and okay, Shell and Victor, you took like my first tablet full of things. No, I'm kidding. But yeah, Shell, I think we've known each other 10, like you said, 10, 12 years. When we put the program together, one day she called me on the phone. We kind of put it together in one day, and we've been going strong ever since. And it's been fantastic. And it's, and then in July 1st of this year, I sold to VillaNova. So if you see my email, Judy@Nova Insurance Partners, that's me. And the reason that I did that is because I wanted to be able to strengthen our programs. Two reasons: to strengthen our programs, and they're also 10 minutes from my house, so it's an easy commute. So and it's done. And we put together RESASURE, and it's worked out. It's great, and it everything that I thought was going to happen when I went there has happened, and you guys now have a bigger, better, stronger program all the way around, which we'll talk about today, among some other things. So with that said, let's talk about what we're going to discuss today. We're going to identify insurance exposures for things that are going on today, but also just in general for stagers, what you want to make sure, whether it's with us or someone else, that you have properly structured and designed on your insurance policy. We'll talk about coverages needed. I highlighted that because with what's going on today, we want to spend a little extra time on that. We'll talk about what is not covered. I did want to bring up virtual staging insurance coverage because some of you have called me about that over the past couple of weeks. You can't really stage, physically. So maybe you're thinking about changing your business a little bit. And I know that there are a couple that could mean a couple of different things. It could mean that you're doing some sort of a graphic arts picture of a blank room. But it could also mean, at least on the insurance side, it also means that you might just be doing a consult on the telephone with a homeowner and video and telling them to do certain things in their house. So when I'm talking about anything virtual, I'm talking about both of those areas. As you all know, right now we've got 4 carriers in the program, and we're consolidating them into probably close to 1 carrier. So Hanover Insurance Company, if you're with Hanover Insurance Company, they've already come back and said that under your current policy, they will cover virtual staging. Travelers, CNA and Hartford are getting back, say they think that they'll be able to cover it, but we'll confirm that for you. So if you have any questions on that, email myself or Rachel Violi, the account executive on the program, and we'll get a firm answer in writing to you from the carrier on virtual staging. We're also going to talk about our new program, RESASURE, and the approach to insurance and risk management, and how Victor and Joe and myself have, they've done this for another program for home inspectors as well, how that we've put this together and what it means. It's great. And what it means for you guys. It means better coverages, probably better rates, and a full risk management program with access to Joe and some of the other things that we do on the claim side. And then we're going to talk about the questions I get day to day, phone calls from you guys, and also Victor's going to address COVID-19. So let's talk about what your exposures are. And current situation, okay? Probably 1 in every 10 phone calls I'm getting right now is the same thing. I'm in a stay-at-home, shelter-in-place state, or I was really worried about my staging inventory and contamination, so I pulled inventory out of my houses. So now I have my warehouse and my storage units. Never before have they been this packed. And what's my inventory insurance? Because I might need to up the inventory. So I encourage you strongly to look at your inventory limit on your policy. The other thing, calls I'm getting, what's my location address? I'm not sure. I moved my staging inventory. There's a lot of inventory in the storage. Not sure I gave you that correct address when I moved. So take a look at all of your policies. And if you don't know, call or email us, and we're happy to pull them up and take a look at them. Okay, so that's one big exposure you have right now that might be a little bit different than normal. Okay, also you might still be working in customers' homes and in vacant homes. You're always transporting and moving staging inventory, including renting inventory and trucks, and you always could break or damage a customer's something in a customer's home. You can scratch floors, break windows, all those kinds of things as well. So a couple of things with the slide before I move on. I do want to define inventory. Our definition of inventory and what you should see on your insurance policy is owned, borrowed, or rented. We have claims in all areas. If you're renting from court, if you're borrowing from another stager, if you borrow out of your own living room, I hear that all the time. Yeah, my couch is in a staged home right now. Or if you own. Also territory, anywhere in the continental United States for any length of time. Make sure that, can be in a vacant for 2 years. Maybe the housing market slows down a little bit now, possibly, we'll see. But you want to make sure that your inventory is covered offsite for any length of time. And a typical insurance policy only covers your inventory offsite for 60 days, no more. So if you're not with us, make sure that take a look at your policy. And if you're not sure, send it to me. I'll look at it for you. And I've heard this at the convention many times. Oh, I'm fine. My insurance is fine. And I'll say, well, why don't you just send it to me and let me take a look? And then I find that you've got that 60-day limitation on your policy. Because regular agents don't always understand how your industry works. So let's just make sure that you have the right coverage. Okay, so other exposures, third-party liability to a customer or another individual. You can be accused of a financial loss or liability to a customer. That's E&O insurance. And obviously the big one, loss of staging property due to theft or fire, is our biggest area of losses. All right, so let's talk about the coverage for all of these. Property insurance, that can be office contents. Make sure they're covered. Staging inventory, again, you want to make sure you're covered in the warehouse, in transit, at a customer's home. You want to make sure borrowed and rented inventory is covered as well. One thing I do want to say, a lot of you guys rent from court, and I have reviewed many agreements. Just watch court, Aaron, these bigger places that you rent from. They value inventory possibly a little bit different than we do. I saw a court agreement where $5,000 worth of furniture on the agreement was valued at it was ridiculous. It was at 9 times the replacement cost. So just make sure if you're counting on our policy or your other insurance policy to cover that inventory, that you've clarified with court in the event of a loss, like a fire, what they're expecting you to pay back, and so that we can make sure that you have the coverage. So I do see a question I did want to address right here because Kathleen, does our coverage with you limit to 60 days off site? No, our coverage covers you for any length of time in the continental United States. So you could be in a vacant house for 2 years and our policy will cover you for that. Professional liability. This is a biggie. I'm really thrilled about this. Our new RESASURE program offers an endorsement that will give a sublimit for professional liability in most states. I have to say in most states, it's not in all states. There are some limitations, but thrilled to finally see a reasonably priced product for that we can include right on your package policy. And what that covers is an error resulting in a financial loss to a third party. So Joe's going to talk about contracts a little bit further in the presentation, but a homeowner basically says, you staged my house, and because I signed a contract with you, you staged my house, and it was not, the staging wasn't good, and my house didn't sell because of it, and I'm suing you. Well, we all know in most of your contracts, you say that you're not responsible, or I don't know what the exact wording is, but it's not, you're not responsible for selling a house, or your staging shouldn't be held responsible for selling a house. But if they sue you, do you want to pay $2,500 to have to hire a lawyer to defend you in court? So I'm really happy to see that we can add this endorsement to our policy now. I do want to mention that fee dispute is typically excluded on professional policies because I have had calls. I'm in a dispute with somebody. They don't want to pay their bill. I didn't collect a deposit, which we all know you guys are supposed to do. Over there, look at Shell right now. I mean, this is 101 staging. And now I'm stuck with rental fees with the staging. And can I put a claim in? And they're typically excluded even on all of our policies. So just know that. The other thing is injury deemed a result of your professional services. So if you have professional with another agent, is there something called a bodily injury property damage exclusion? There's a big case in New York that Victor and I always refer to. Someone hanging a mirror in a restaurant and it fell down and caused damage. The general liability carrier decided that it was a professional liability claim and denied it. And the professional liability carrier decided it was a general liability claim and denied it. So now on our policy, if we can put both those, the general liability and the professional liability endorsement on the same policy, there's no gray area there. So that's nice to see as well. All right, and then general liability, that's a big one. You burn somebody's house down, you're staging. I always tell the old claim I had years ago with remember cardboard box beds, and the stager didn't put the sign, like saying it was a cardboard box beds, and somebody's husband was fooling around and jumping on the bed and hurt his back. There you go, that's a general liability claim. And let's remember with general liability claims, when I say damage to a third party or injury to a third party, that's not your independent contractors. So that's work comp. So if one of your independent contractors is hurt, don't confuse it with general liability coverage. This is a customer, somebody walking through, a realtor, somebody walking through the house, viewing the house who's hurt, something like that. Other insurance coverage that hired and non-owned auto liability, very important. Hired auto liability if you're renting trucks. Our new program also allows for you to be able to rent up to a $50,000 truck without taking insurance at the rental counter, which is nice. Non-owned auto, you're in your own car. Lots of you guys do not have vehicles or trucks in your company name. You want to go to Home Goods, you want to buy those pillows, you don't like the things that you brought with you or that the homeowner has. You go to Home Goods to buy pillows. You're involved in a serious at-fault accident, you're sued. Who's going to protect your company, number one, if you're sued, if they call your company into it. And the second part of that is, in that situation, your personal auto policy would be frontline. But we all know we probably have like a $300,000 limit. What if they sue and win for $1 million? Where's that other $700,000 going to come from? It could come from this policy. And that's your non-owned auto liability. So, and very important coverage that you need to have on your policy. I've been in insurance 30 years. I've seen, 4 or 5 of those claims, but I put it on everything because those claims all paid out at over $1 million. So it's weird situations, but you wouldn't want it to happen to you when you could pay $40 to have it on your insurance policy. Also, if you have a commercial vehicle, a truck, box trucks, everybody has box trucks. You want to make sure that you have the proper coverage on your policy for them. And as you grow, I always recommend an umbrella as you're to protect. That's about asset protection, protecting the revenue in your company. Because if you're bigger and they sue you for higher limits, you want to protect that revenue. But also our policy automatically gives you a 2 million, 4 million limit. So it's kind of like you have an umbrella built in right at the policy premium that we're charging for our standard policy. All right, so let's talk about what's not covered on the business owner policy, because these are calls I get all day long. Do I need work comp? Is it covered under my business owner policy? And that's such a huge issue in your industry right now with what's going on in California. So what I say is, if you have people working for you, whether they're your employees or they're independent contractors, you should have work comp for them. There's just too many things there.
Judy, I have a question on that. Your 1099s, you can work comp them?
Yeah, you can. Yes, absolutely.
Wow.
If they're uninsured. Yeah.
I did not know
that. As a matter of fact, if I write a work comp policy for you and you don't tell me that you have uninsured subs. So, because people have employees, right? And then they might have some uninsured, maybe they're movers or subs, or some of their designers or subs, or, you know, you have a kind of a little bit of this, a little bit of that going on. Maybe your employee is a lead designer, and then your subs are just people in staging and moving. When the carrier audits you, they're going to pick up your uninsured subcontractors, and you're going to pay for them anyway. They will pick them up. So you need to disclose everything.
Judy, clarification on that though, just so for Shell's question, if you only had 1099s, it would be hard to get a work comp policy to cover them. You'd have to have some sort of payroll.
Yeah, you'd probably have to put, like, the executive officer or the owner of the company would have to be on there as well. Yes. But you can insure subs.
They're going to want to insure them.
Say again, Victor?
The carrier is going to want to, because they're picking
they're going to pick them up.
They're picking up the exposure. Yeah.
Okay, so also, because I hear the gulp on the other end of the phone when I say this one. Car accidents are, if your employees are injured in car accidents, that is work comp. So that's the other thing. If they're driving a truck and you don't have work comp, and there's a car accident and they're hurt, and they go to the hospital and say that, the hospital is going to be looking for your policy number for work comp.
So,
yeah.
Someone, Leslie, asked to say that again about 1099. So I think there's some clarification there.
Okay, so with the insurance companies will pick up 1099s, but we would like to see some sort of an employee on the policy as well. So the owner may need to be on there as well. But insurance companies, when they audit you, they will pick up uninsured subcontractors, 1099s.
So Leslie, what we were saying is that we could get workers' comp for a 1099.
Now, the best thing to do is to have, and this is hard because you're picking up people that are your mom and pop type of people when you pick up 1099s, typically speaking, that is to have them be insured and to have a contract with them that they have to hold insurance and hold you harmless so that there actually is coverage. And then the insurance company will look at that typically as a cheaper coverage as well, because there is a insulating level of coverage if the subcontractor has insurance as well. And if you're doing everything right, that's how you would be hiring a subcontractor. You would make them get their own insurance. But it happens that you hire uninsured subs, and then your carrier is going to want to pick up that exposure because they're basically on it. If they get hurt, even though it's a 1099 employee, they're going to be in a situation where they might have to pay.
Yeah.
So
anyone who's talking to me, here's my analogy. You can't have your cake and eat it too. So, you can't either. You can't be like, well, yeah, okay, I'll insure this employee, but he's moving, but he's a subcontractor and he's not insured. You can't do that. You have to have it. It's got to be one way or the other way with the carriers. Okay, so the other thing I want to bring up is, and many of you know this already, now this does not pertain to California or New York, but we do have a separate insurance program in the other states, in most of the other states. If you have third-party insured movers and can prove it to me, I need to see a certificate, and I need to look at the certificate because I'll hear, yeah, they have work comp. I need to see on a certificate that your third-party insured movers have work comp. We have a program that has much, much lower, they call it the interior design rate. It's really an outside salesperson rate, but that we can put you on a policy with a carrier with using, we'll call it like a designer's only policy. But you can't be moving furniture on a daily basis. They do get that the insured mover could leave, because this happens to me, and I'm not a stager, but I'm a girl and I changed my mind. The mover leaves and you don't like where the couch is positioned, so you have to move it yourself a little bit here and a little bit there. But for the most part, you can't be moving furniture, and that's a very economical. Anybody out there who has it, if you want to weigh in on that, but very economical. All right, so it looks like all the questions are being answered, or that Joe and Victor are covering them on another part. talked about fee disputes already, and we talked about bodily injury and property damage due to professional services. Okay, so here's some claims. I just want to show you what's going on in the program. Knock on wood, been very clean. That's why, a typical program usually lasts around 7 years. We're at about year 12 and 13, and I want to thank you all for that. I really feel that you use contracts, you do your best to try to enforce the verbiage in your contracts, and because of that, we can offer you these lower rates and these better deals and a better program, and we're going to go the long distance with you guys. So I appreciate that. So here's the first claim. I highlighted it because it kind of pertains to what's going on now. Everybody has a lot of inventory in the storage units. So here's a fire in California this year. The storage unit fire, the stager had $16,000 worth of insurance coverage, but she had $53,000 in the unit and it burned to the ground. So don't let that happen to you, okay? I know sometimes you guys think when I ask you what replacement cost is or what the limit is we need to put on the policy, well, you're like, well, I got 10,000 in this house, 10,000 in that house, 10,000 here, 20 in storage. I'll never have that much in storage. Well, not true, not the case all the time. So keep your eye on that. Then we get little claims, broken doors, theft of inventory, damage to a homeowner's item. Obviously, we get occasional work comp claims and occasional auto accidents. And that's about it. So good job on that. Victor, you want to pick up from here on RESASURE?
Yeah, sure. So, and I was seeing some questions that were coming up, and sometimes with the branding of this stuff, it gets, a little confusing with all the names. So the nomenclature, I want to try and explain and make sure everybody understands what we built here. When Judy and Joe, myself, all got together coming up on a year, we decided to put together the best program possible for stagers, designers, and organizers. So if you see the term SDO Pro out there, that's the program for stagers, designers, and organizers. That's specifically a combination efforts of Penex Insurance and VillaNova Insurance Partners. So we made a special ramped up version called RESASURE that has more coverage, both on the insurance side and the risk management piece. And it comes at a discounted price. So when you see the term RESASURE, for all the people asking questions, that's just the branded name of this two-pronged approach: insurance and risk management, specifically for RESA members. And I'm going to go over some of the extras that you get as being a RESA member and being in RESASURE. So it's a two-pronged approach, basically, as the slide says. It's insurance. So you get Judy's sage advice on insurance and her years of experience working with specifically stagers and designers. These are tailored programs, as she has alluded to. We do have 4 carriers that we can place them. Hanover has given us some extra bells and whistles that she's touched on, which is including professional with the business owner's policy, which we think is huge. That was lacking before, or it would be extremely expensive to add a standalone policy. Not extremely, but at least double the price if you were on a $500 BOP, let's say, business owner's policy. That's tailored with risk management, which is Joe's program that we're going to touch on. Now, just so everyone knows, Joe Denneler is our in-house counselor and attorney. He is not a subbed out situation. He works directly in our office, and he's part of the team, part of the ownership team. So it's a little different than most programs. So what we set upon is to come up with the best possible program that we could, specifically for Shell, called RESASURE. And just first of all, what is risk management? I always like to touch on that just a little bit, because sometimes that confuses. It's a fancy term and it's thrown out there a lot of times. But really, basically, what we're talking about is using tools to alleviate or to prevent the chance of a loss happening. So what can we do beforehand that we can educate each person and make sure that they're better insured for us and that they have less claims, therefore insulating their insurance so that they will pay less over the long period of time. So what are some examples of that, to be specific? They're basically the things that Joe has built and he's going to talk about, which are service contracts, subcontractor agreements, and how you can button up your business and make sure that you control who's working for you and make sure that you're insulating yourselves and not taking all the exposure on yourself. And educational newsletters, webinars, pre-claims assistant hotline. So we have a dedicated number that's going to be at the end with all our contacts, that if you think something's on the horizon, you call in. It's dedicated for RESA members to call in, and that message will be forwarded over to me and some of the service people, and we'll shepherd that along to Joe. Eventually it will get to Joe, who it will work directly with you if there's going to be a situation, and he will give you his advice on how to handle a potential claim.
So everybody knows, in terms of what we have in-house on the risk management team, in addition to me, I've been litigating for 22 years. We have Victor. We have a certified risk manager in the office, Mike Holland. And in addition to that, we also own our own third-party administration company and have licensed adjusters on staff as well.
Yeah, so what we have sort of designed here is the risk management piece is, and what RESASURE specifically gives is these things listed on this slide here. Because you're part of a risk management program, when you join RESASURE, we're able to give subjective credits in our underwriting guidelines that can lower the cost of your insurance, essentially. So it's going to behoove you to be in the program, because hopefully we can save you just as much money as the program cost, if not more. As Judy alluded to, Hanover is rolling out further discounts that you may be eligible for. So we think our pricing is going to get even better as the year rolls out. They're coming out quarterly, and they're starting in May or June. So every state, it depends on how they roll it out. It's going to be by geographic portions of the country, but you're going to start reaping the benefits of that through our program. The professional liability with the BOP and the other things we had already discussed. Monthly newsletters will start this month, and Joe's going to talk about the contractors, the contracts, and the subcontractor agreements. You will see this along with a few other documents when you sign up. This just highlights the cost. We call it the RESASURE Advantage, because you get an advantage from a pricing standpoint, and you get an advantage from a coverage standpoint on the risk management side. But by the way, just so I'm clear, because a couple of people were asking on here, you will be part of RESASURE, not just be with Hanover. We'll probably move you into Hanover, but we are going to put you in the best situation that we can on a coverage and pricing standpoint. We work with CNA, Travelers, which you may already still be with right now, because either your renewal didn't come up or it was the best place for you. You'll come up Hanover, and then there's some other, Hartford's are used a little bit. There's on the professional, Chubb and Hiscox sometimes. It all depends on your state and the guidelines that we come up with. But for the most part, we're looking to put everybody into a Hanover type of situation, but doesn't have to be. But if you are in RESASURE, you can be with multiple carriers or different carriers, just so we're clear. A couple of questions coming up about the cost. The cost is $95, and that is a year. That's not a month. So you will pay that upfront as you join or renew your policy, and you get all these coverages that are listed on this. This will come with your welcome letter. You'll get a welcome letter. You get the RESASURE Advantage paper and a list of contacts for you to be able to reach out to upon joining, as well as your contract, your service contract, and your subcontractor agreement. So all those things are at an extremely discounted price for RESASURE members. If you think about what it would take to either get a lawyer to make a contract, to get a really buttoned up subcontractor agreement, or to have access to pre-claims assistance from a lawyer and all the years of knowledge of Joe's experience, we think this is a fantastic price and a tremendous offering. So that's when we're going to turn it over to Attorney Joe Dendler.
Well, that's an old picture. Okay, I don't even think I can see the gray in there, and the hairline's definitely way worse now.
No way, Joe.
She looked like a very reputable news reporter. I'm not going to lie to you. You look like a journalist.
I clean up well. If you would have saw me last week after 10 days into quarantine, the beard was looking a little ragged, but you know.
You got a little bit of a Stephen Colbert kind of vibe to you there, Joe.
That's why I had these on for the ears. Hi, everybody. I'm Joe Dendler, and I am an attorney. Like I said earlier, my entire practice, my entire career has been representing professionals in litigation and really real estate professionals. I started with home inspectors and appraisers and moved out from there. And what my focus has been on, other than the litigation, is setting up programs and assistance for professionals who do the type of work that you do. And the reason is that there's a huge gap in risk management and in industry general for a lot of the players in the real estate transaction market like you, where nobody's really looked at this from your perspective and said, well, what's the best way to do this for you based on what you do? And part of that and what we need to have in order to be able to do that is the knowledge that we have on the team with Judy in particular and Vic and certainly Michelle. So that our key is to focus in on your particular needs and develop a program that works for your business. And the big insurance carriers don't really do that. And we have had a lot of success with other lines of business doing this. And we definitely believe that we're in a position to be able to help out stagers in the same way we've helped other real estate professionals. Generally what we provide on the risk management side is we do an analysis of your business. We're here to review your legal documents, but more importantly, to be there throughout the year. And the reason for that is things come up from time to time. It might not be an insurance claim situation. It might be something relatively simple, but to have an attorney on speed dial and on retainer to be able to answer those questions, it's just cost prohibitive for the average professional. Whether that be a stager who's working by themselves to somebody with even 10 or 15 people working under them, it's still a significantly cost prohibitive endeavor to do that. And in addition to that, I think, for the most part, like we found with home inspectors and appraisers and agents and brokers, there's no lawyers out there who really specialize in what you do. And we have the opportunity here that we focus on that. Before we ever got to this point where we're here talking to you today, we've been dealing with this for months and months before we ever even came to talk to you, because we needed to make sure that we understood what you did. And more importantly, that we were partnered with Shell, because we wanted to be partnered with people who are leading the industry in terms of setting the standards for you and trying to do everything we can to help you and give you the most bang for your buck in terms of your trade association membership and your insurance. So with us, we like to be available to you 24/7 to help you with these things as they happen. The primary focus of any good risk management program is preventing the claims. It's fine that you have insurance, and it's good, and you need to have the insurance. But if you have a number of claims, you're going to find that it's more difficult to get insurance, or you might not be able to purchase it. You're spending your deductible, which, I don't know anybody in business that likes to write checks for $2,500 to let somebody else handle it when it's something that could have been prevented with some simple effort or some simple consultation. It benefits us to have you not have claims, sure. More importantly, we want you to be in business and be successful, and we don't want you writing those checks unnecessarily. And so we've used our power in the insurance industry to be able to negotiate some terms for you that you wouldn't be able to get somewhere else. And that's really the focus of what we're trying to do. The claims assistance, if it's a real insurance claim situation, I'm here to try to make that thing go away before it ever hits your policy. That's my primary job. We don't want you writing those checks. And if there's a lawyer involved on the other side, you need somebody who's a lawyer to help you out in that situation. We used to, when I used to teach the attorneys under me how to do cross-examination, the first thing we ever taught them is you never ask questions or go into a war with somebody where you don't know the answers to the questions or know more than they do about the subject. And it's the same thing with law. You don't want to go into an argument with a lawyer about a claim on behalf of some third party unarmed. And we want to make sure you have access to that 24/7 so nobody can ever pull the wool over your eyes and try to tell you that you're responsible for something that you're clearly not responsible for. And in addition to that, we deal with the contracts and try to put you in a position so your first communication with your client, that service agreement that's going to tell them what you're going to do and maybe more importantly what you're not going to do, that's tight and that's buttoned up, because that's your first line of defense in any claim situation. If you're a professional performing services, you really, really have to have a written agreement with your client. And even no matter how big or small you are, they're important because they set the parameters for what's going to happen with you and that client going forward in any other situation that may arise. Now I'm going to
go ahead. Real quick for a minute, Joe, just to clarify, if there's some questions. I think people are pretty confused. So we want to make this super clear and easy for everybody to understand. Everybody needs regular insurance, your general liability, all that's your insurance policy. Risk management and RESASURE is something different. It's something that you don't have instead of. It's something you have in addition to. It's kind of like a prepaid legal, but for stagers, to where you're going to have access to wonderful Joe Denler throughout the entire year. So he can write a contract for you. You have subcontractor contracts, so you can review your contract. If you have a claim or you think you're in a sticky situation, or somebody sticks you on a bill, or somebody stubs their toe and you're not sure what to do, any type of little mini legal kind of conflict disaster during the year, guess what you get to do? Get them up on the phone and say, hey, Joe, this is what's going on. What do I do? So that's where Joe's going to help you. So you have access to an actual attorney all year long, and it doesn't matter what your state you're in, because Joe is able to help you with that. Is that a fair assessment,
Joe?
That's
a much better job than I did. Thank you, Shell. And that's exactly right. And I'll tell you, I'm the worst salesperson in the world, especially when it comes to me. But that's the value proposition. That's included in that $95 a year additional charge.
Right. And let me say, $95 a year, we have attorneys. RESA's got attorneys. We got several attorneys. I can't get them to blink an eyeball at me for $95 for 10 minutes. So this is because, again, we've got all of our power numbers through RESA, and that's how we're able to negotiate these types of things. So there's more power in numbers. So it's one of those things that I really strongly suggest people take advantage of it, because you want a legal team on your side. So you want your risk management, team behind you. You want your insurance team behind you, and this pulls them kind of all together, kind of like under one roof. So you'll really be protected, and that's what we're looking to do, is to help protect your businesses.
Yep, that's the bottom line. That's the ultimate goal, no matter where it goes or what happens. Our job's here to insulate you, not just from submitting claims you might not have to claim, but from all aspects of your businesses. We want to be your go-to for risk management and consulting. I'm going to talk a little bit about service agreements now, because I think it's a topic worth talking about. Whether you're signed up with us currently or not, I think there's some important points that I wanted to talk about. And that's, I've been focusing a lot on the service contracts for you over the last couple of months and putting together what we believe will be a very, very beneficial and buttoned up service contract that you can use in every state. But there's some certain parameters I wanted to talk about a little bit with you to make you aware why they're important and why it's important that part gets done right at the very beginning. Your agreement is basically setting out everything to do with what you're going to do for your client. And, most people go through a real estate transaction once or twice in their life. And so it's important that even though you tell them what they do and they look on the website or they've been referred to you by somebody else, ultimately what the nuts and bolts of what you're going to do for them needs to be in a written agreement with you and that client. So there's no misunderstandings. It's there to benefit them and you. It's there to give them a clear understanding of what you do, what you don't do, and what happens in terms of a claim or if there's any kind of dispute over the contract. And it protects you from litigation. And I'm going to talk about some things that you can use in your contracts that help insulate you further from a claim or litigation. So generally speaking, I see a lot of service professionals in staging and home inspection and other real estate trades where you've got a contract that's either been, amended many times, and maybe you got part of it from one person and part from somebody else, and you're using it and it seems to work okay. But the problem with contracts is you don't know whether they work or not until they don't work. And they're looked at when a judge or there's a legal dispute related to a contract, the judge is going to look at your contract in a vacuum and going to look at it based on the particular situation between you and your client. As a general matter, just as the base level of enforceability for your contract, it's got to be easy to read. It can't be unconscionable. And that's just a fancy legal word to justify charging you a bunch of money to tell you that it's unfair. And so what a judge is looking at is the contract so one-sided in favor of the stager that it's unenforceable as to the consumer. And so you'll see in some contracts, for example, I see fee shifting provisions. And what that means is you're telling your client that if they sue you and they lose, they have to pay your legal fees related to that claim. I can assure you in the United States, it would be a very rare occasion for a judge to ever enforce anything like that. And it's actually something that a judge is going to look at and say, well, that's too one-sided. Now, that's a very extreme example, but that's what the judges go through on a case-by-case basis when they look at your service agreement. And it has to inform the consumer of any important provisions and set them apart. So, for example, if it's something critical, like we're going to talk a little bit about how you can limit your liability in the contract, that's something that should be in bold or set off in some way so that the reader's attention is called directly to that. That it's kind of, think about it when you're staging and you place things in places to direct people's attention to that piece. It's the same principle with a written agreement. The goal is to direct people to the most important provisions so it doesn't get mixed up in the rest of the language. As far as how you send your service agreement to your client, we're well past the days of mail, snail mail. Really, you need to get that service agreement to your client right around at least a day before you're going to start services, but as early as possible. And the reason is, in the legal world, when somebody brings a claim and their contract doesn't really favor their claim, the first thing they do is contend that they didn't have enough of an opportunity to read the agreement, really understand what it was that you were asking them to agree to. And they do that every single time. And as you can imagine, my life, taking people's depositions, my job was inherently, to get paid to get lied to on an almost daily basis by the people suing you or suing my clients. And so they always somehow come up with a way to try to get out of these contract provisions. And one of the easier ways for them to do that is to say, I really didn't understand what I was saying. I'm a poor consumer. Please, don't enforce this egregious contract against me. The longer time they have to look at the contract and appreciate it or review it with their own attorney, the better it is for you in terms of the enforceability. And always have the agreement signed before you start any of the work. Many times I've had judges in the past void an agreement because the services were started before the client agreed to the terms. Now, that might not affect payment, but it's going to affect all these other things that we're going to talk about that can help you avoid liability based just on your contract provisions.
Joe, can I interrupt you just for 1 second?
Yes.
Also, because I've had this question more than once or this comment more than once during a claim, don't let the realtor sign the contract.
No. No, listen, I'm going to tell you, you deal with agents all the time. I deal with the agents all the time. Sometimes they're a co-defendant in the cases, but they want to do their best to help their clients out, just like you do and anybody else does. But sometimes they go too far afield from a legal standpoint what they can really do. You never want to be entered into an agreement that's signed by somebody who isn't the person you're providing the services to. And that's critical. You always want to make sure it's your client, it's the end client that is signing that agreement. However your work is set up with them, it has to be that the end client's going to sign that agreement, because that's the party that's going to sue you if there's a claim. And you need to be able to enforce that agreement against them. Being able to enforce it against the real estate agent who isn't suing you doesn't do you any good whatsoever. And
so,
don't
Joe,
let it,
one of the questions, several of the questions are, so what if the realtor's paying for the service? Then what do you do?
It doesn't really matter who's paying. That's a separate animal. Whether or not the realtor's paying you for the service or cutting the check doesn't matter at all. What matters is who is the beneficiary of that service. That's the key element. And more often than not, it's going to be the actual client who's involved in the transaction. There's going to be occasions where you're hired by an agent and you're performing the services for the agent. That may happen, but ultimately it's got to be signed by the client who's receiving the service, because they have the legal cause of action. They have the ability, the standing to come to court and sue you to allege that you deviated from what a reasonable professional would do. That's a lot, and I understand that's a lot. And usually it's normal to think that the person paying you is the person that should be signing the agreement. But technically speaking, it should be the person who's receiving the services. Because otherwise you might have an unenforceable agreement. And like I said, there's some clauses here that, you know, a judge might think might be onerous against somebody unless they understood what they were signing. So I see Joanne had a question. If they own the property, shouldn't they sign the agreement even if the realtor is paying? That's exactly what I'm saying. That's correct. That is correct. And even if the agent's calling you and hiring you on behalf of their client, you need to make sure you know who the end user is of the service. They should be signing the agreement. Plus, you're going to be inside that house, and you're going to be exposed to that person's belongings, not the realtor's belongings. You know, it's not the realtor's house. It's not the realtor who's going to try to claim, for example, that somebody left the house unlocked. It's going to be the person who owns the house. So you always want your contract to be with the person receiving those services. And if I miss a question for whatever reason, Shell, please feel free, if you're looking at them, just jump in and interrupt me. That would be good, because in case I miss something that's important. I want you to understand that your service agreement primarily has to be written so that your client understands it. It's fine for lawyers do this all the time, man. We really love to see that we know a lot of big words and Latin and all kinds of things that make these contracts look legalese. But the reality of the situation is you're not writing it for another lawyer. You're writing it for a client, and it has to be understood and readable by the average consumer. The average American reads at a 7th, 8th grade reading level. So the 13 and 14-year-olds in your life need to be able to read that contract. And I understand how ridiculous that might seem, but the reality is that if the person reading the contract doesn't understand it, that's where we're going to have the problem enforcing it. And looks at that agreement and says, well, you know, I know you, stager, are saying this means X, but your client's saying this means Y. The judge has to now figure out what the reasonable person reading that agreement would believe it means. And the reasonable person in America is going to be a 7th, 8th grader, because that's our reading level. That's the state of education, for lack of a better term, in our country right now. And we have to play the cards we're dealt. We're not going to change that fact through anything we do. So you want to avoid using trade terms and nomenclature and like Vic said earlier about that, mentioning that word, that we want to avoid terms of art that the average person might not understand. So that's your target audience. And what I try to do with these agreements is I write an agreement that works in every single state in the country, and every state has some nuances here and there that we have to adjust for that particular state, but we do that, and those agreements are all, you know, will be available for everybody in every state based on that state's laws and what that state will allow. But understand that these are the people who have to understand that agreement, and these are the people that a judge is going to look at to say, well, could the average American understand, or the average person understand that agreement?
Joe.
Yes.
Decent question here from Lori. Says, do we need two contracts, or she may even mean two parts of the contract, one signed by the client for the liability, to waive the liability, and one by the realtor if they're fronting the costs and costs and fees. So,
well, the realtor may be fronting the cost, but ultimately the beneficiary of that cost, the beneficiary of the service, is going to be your client. I would say to you that, I'm not real concerned about who's paying the bill, because your client's ultimately responsible for that. And I don't think the realtor is going to try to leave the client hanging and say, well, I'm not paying you, I'm going to leave it to my client. They're going to cause a suit with their client. We don't really concern ourselves with who's paying. Now, if the realtor hires you and that's the sole relationship for whatever reason in that particular transaction, then the realtor is going to sign the agreement. But understand that the homeowner still might have a claim against you. So I'm telling you, as a best practice, it should be the person who owns the property that you're staging. And that whether or not the realtor's paying you. I see Leslie also wrote that clients won't sign if fees are in the contract and they aren't paying. You know what, Leslie, if you want, you're going to have my contact information is going to be at the end of this. I believe my email address at the very least. Let's talk about that a little bit more together so I can better understand your particular situation, because maybe I have a workaround that might be more particular for the way you're doing it. If that helps.
Here's a question. If the client doesn't sign the contract but accepts the service, meaning the stager stage it, is the contract still enforceable? Oh, that makes my skin crawl. It's got the EBGBs.
Yeah. So let me say this. Are you likely to be able to enforce payment for those services? Yes. Now, a judge is going to decide what's reasonable based on your industry because they don't have a writing in front of them that's signed. But the chances of you not being able to collect your fee, you probably will, but you're going to spend money getting there. A collection action, small claims court is going to cost you some money. Even if you represent yourself, you're taken away from being able to run your business and do your work for which you're paid. So either way, there's a financial effect on that to begin with. But you won't be able to enforce the particulars of your contract that might relate to something. Say, we're going to talk here in a minute about limiting your liability or getting indemnity from the owner for safety issues that somebody might encounter while they're at the property. You might not be able to enforce any of that, okay? Because that's going to be particular to this written agreement. So I would say to you that you're not going to be able to enforce most of the agreement. You might be able to get your money back, but you're probably going to pay out some money to try to recover that. So at the end of it, it would be a dire situation where we're relying on a judge to enforce the agreement where the writing wasn't signed.
So the preventative measure to that would be don't stage without a signed contract.
Yes.
I mean, I cannot ever express this enough, is that when I hear a lot of feedback from stagers. I do a lot of talking to people every day. And part of the problem is the lack of confidence. So they will say, when do I ask for payment? I don't know how to ask for payment, or I asked for payment, or they didn't want to pay. Guess what? They don't pay you a deposit. They don't get on the schedule. It's all the way it is that you present it to them. What I want everybody to walk away when you're asking for payments, what the advice I'm going to give you, pretend you're at a drive-through window at McDonald's and how they ask you for the $2.10 for your sausage McMuffin and small coffee in the morning. That's how you ask for it, just like you expect to get it. There's no qualms about it. Nobody's worried about, I don't know if they're going to pay me or not. What if they what if they don't have $2.10? It doesn't work that way. It's great. I have a time on Thursday at 9 a.m. I have a time on Wednesday at 11 a.m. Which works best for you? What card would you like to put this on for the deposit? And stop speaking. Most of the time, they're just going to pony it up and give it to you if you give it with that type of confidence. They don't put them on your schedule unless you have your deposit, and then get that final payment. I would recommend that you get it at least 5 days before you drive out of your home, because if for some reason they gave you a check, if it bounced, you're going to be upside down. You're going to be tracking that down later. So get it ahead of time. Don't leave your driveway. Don't leave your warehouse unless you have been paid in full and your contracts are signed. It avoids a whole lot of things. That's risk management.
That's right. And you're really not, again, like it's easy to get in the mindset that you think you're asking for somebody that you're not, you're asking for some kind of favor. But the reality is you're a professional, and your time and the services you provide, and more importantly, what you have up here that doesn't translate in any contract. It's because this is what you're bringing with you for the most part. That has a value, and these people need that service. And there's nothing wrong with getting paid in advance for what you do. Nothing wrong with it at all. And you should always strive to have the money in hand.
So Joe, Shirley's asking, isn't payment imply the contract to move forward? That's called implied consent. It's like when you sit down at the dentist's office and you open your mouth and they jump in there. That's implied consent because you opened your face for them.
Yeah, you didn't stop them.
However, the contract outlines, the contract just is there to protect you, and it's there to protect your client. It's really there as an agreement. So everybody's on the same page. So there's no surprises. Nobody has a misunderstanding. I thought you said it this way when you really meant this way, or you just don't quite remember it.
Yeah.
It's always there. So whether or not you got payment or not, if you're staging a home without a contract, mark my words, today, right now, call me when I'm correct, you're going to have a problem.
Yes, I will guarantee
It'll
you.
happen. Guaranteed.
I will guarantee it after 22 years. That is some very, very good advice, because I've seen that play out many, many, many times. That I'll tell you, the two biggest problems we usually have with this type of service is the failure to get the agreement signed, or to get the money in hand before the work. And then the fear of turning something into your carrier and then voiding your coverage because you didn't do it when you were supposed to. Those are the two things that you should never have a fear about doing. Get it done, and get it done in advance, because listen, there's no, once you get into the part where you have to have a dispute with the client about what you agreed and not agreed to do, you're not going to win that argument without a written agreement, because the judge, people, when people come in with a claim and it's time for them to try to get money somewhere, their memory of what you told them and your memory of it are going to be very, very different. And, they can say whatever they want about it. They can say, well, halfway through the service, the stager told me that they were going to add these 4 other pieces and they never showed up, and that's why I didn't pay. Well, without an agreement saying, here's what I'm doing, here's what I'm providing to you, it's your word against theirs, and consumers make a compelling case in court versus businesses. I can tell you for sure. That's why we're here. We're here because the legal system is not set up to help businesses. That's why we have to do these things.
So, Joe, Monica's asking, can a general contract be provided so stager can adapt it to yours? Now, correct me if I'm wrong. If you go out and you get forms from the internet, contracts from the internet, or you hire, let's say you hire an attorney and you spend $2,500 for them to write you a contract, and you go in and you change it, guess what? They're not going to defend you in that because you've altered their work.
Yeah, you're not going to have a claim against them for saying that the contract was ineffective or that it wasn't properly written. You're going to lose that argument. Listen, it's no secret that we're also all the judges, and we're also all the legislators. So we tend to set it up on our favor. That's the harsh reality of the legal system. So when you have to have a claim against an attorney, they're going to have the out. And if you change the work product, they're going to have an out. Trust me on that. And that's why, we try to make we have to make the agreements to some extent state specific, because there's some things that will work in some states and won't work in others. But we already have that database. That's what we've been doing for many years now, is we know which things we can use in these service agreements in what states and what will work and not work.
Absolutely. So Jill's asking, says, so the contract is for liability and does not include a clause about the payment due. That's not true. So if you look at the slide we have in front of us here, the first thing on my list there of what needs to be in the agreement is the price of the services, right? So let me present a hybrid to you just as we're talking, because, it seems to be a hot topic, and I want to try to address this as best I can for you here. If you have this situation where the concern is that the realtor isn't going to pay, and that you need to have them and the end user of the services sign off on the agreement, I can modify that for you if that's your business practice and you're concerned about the realtor not paying the bill. The main concern for me is that the end user has signed that at some point, right? Because that's the person that's going to sue you. But we could always modify the agreement and add the agent in there. My concern for you would be that the agent might not want to sign on for some of the things we're going to talk about here in a minute about what you can put in that agreement to limit your exposure. Generally speaking, I don't think they would care. But we can also modify it to do that. If we're anything, we're agile in this business, because you have to be, and because things change and the way people do business changes from time to time. We can also do that as well. We want to. Our goal here again is to do what works for you. We're not here as much to dictate to you as much as. I can't express to you how important it is to have an opportunity like this where we get to answer questions and get asked questions from the people we're trying to help, because that's more important than anything else. I'm not out there doing your job every day. I could be the greatest lawyer in the world and write the best contract in the world, but ultimately I'm never going to know what you know about your work. Never. And
being able to sit here and answer questions like this and come up with situations and answers for those questions is more valuable to me than anything else. So I appreciate the questions. And like I said, we're here to make this work for you. And we'll do whatever the law will allow us to do to make that happen.
Yep, absolutely. So Emily's asking, what do you have to say about collecting payment at closing? She doesn't do it, but she's curious. I have my thoughts. What are yours, Joe?
Well, what if it doesn't close?
There you go.
That's my, you know, I've seen that happen from time to time. Usually it's the home inspectors that are causing that to not happen. But yeah, if it doesn't close, you're out of luck, right? You're not sitting at the closing table. You know, there's no HUD form there with your name on it and a price next to it.
Right.
So
now, let me add something to that, Emily. I don't know if you've checked out Zoom Casa. Zoom Casa is another RESA partner. They will actually pay you up front as the stager and take the payment out of closing. There's a whole process to it. It's fantastic. Check them out. It's on the RESA website for more information.
that's a great alternative if you need to. I mean, that seems to me that it gets the money in your hands and let them worry about whether it closes. Right?
Exactly.
Better them than you, that's for sure. So generally speaking, basic things that have to be in your agreement, you know, the bare bones. You got to have the price of the services, the price you're charging for the services. You need to have a description of the scope of what you're going to do. The full name and address of your clients, the address of the place you're going to do the work, and the start and end date of the services. Those things, they're universal. No matter what you're writing an agreement for that involves professional services, these are things that have to be in there. It's important. I'd say if I had to pick one of them, if I was forced to pick a hierarchy, I can tell you for sure it's price and description of the services. Because, you know, with yours in particular, what you're going to do is dictated by the property that you're going to stage. And so there's going to be some modification. The way we're making this agreement up is going to allow you to put things into it for any specific situation that you're, you know, any specific house you're going to work in. And so that way that you can modify this, that all the critical things are going to be in the agreement, but you'll be able to modify it for that particular stage job. And so with that in mind, you'll see, you know, if you join the RESASURE program, that agreement that we're writing for everybody will have, you know, a place for you to set up things that are specific to that particular job. But these things obviously are the more critical things, the price and the scope of what you're going to do. And maybe more importantly, what you're not going to do, which also would be included in the scope. But if you're listening to this and looking or thinking about your agreement, these are the kinds of things that have to be in there no matter what. And you want to talk about the exclusions in your agreement. You know, we're all very good at telling you what we're going to do for you. The harder conversation, other than asking for the money, is telling people what you're not going to do. And people, listen, like I told you, most people don't go through this process. I'm talking about the individuals, not the agents. Most people don't go through this process more than once or twice in their life. And what you do has become a lot more prevalent than it used to be maybe the last time these people sold a house. And so it's important that they know what your limitations are and what you're not going to do for them. Because if it's not there, people can make wild assumptions about what this might involve that really aren't what you're there to do for them. And we want to nip that in the bud. We want to nail that right away in the agreement and make sure that that's in there. Now, your particular business may have nuances in terms of exclusions or things you do or don't do that others might not have. If you're in our program and you're using our agreement, again, it's an open agreement that can be modified. And I'm here to help you with that stuff in terms of, hey, Joe, I looked at your agreement. It's great, but, you know, I do this, and this is a little bit different than everybody else. How can I account for that in the agreement? Well, that's part of the risk management services. That's when you pick up the phone and we talk about that. And I give you some ideas on how to work around that, or how to make yours different to where it adapts your unique profile and what you're doing for your clients. But it's really a disclosure of what you're not going to do when we're talking about exclusions. Now, for your purposes, you're going to have some limitations on your abilities just based on how the house is laid out, what rooms are available. There might be physical damage at the property that you know, we certainly don't want to be part of concealing from we don't want to be caught up in that kind of a mess. But there's different things and nuances about each house. Each house is going to be unique. And so in that situation, you might have particular things about how that house is laid out that inhibit your ability to perform the services. And so you'd want to get that clear with your client. I'm not going to stage this room because that's the simplest way, right? The simplest example is there's a room here we're not going to stage, and here's why. And there could be any number of reasons. But that would be something that you want to be clear with your client about at the beginning of it. There's safety issues that are involved, and not just your safety, but people can misconstrue that, you're not there to make sure that the people who come for the house showings are going to be safe walking through the house. That's not your job. But you'd be amazed at what people think about what the scope of your service might entail. That you're there setting this up to prevent somebody from tripping and falling on the stairs, or, slipping on a rug that wasn't put there by you. Those are the kinds of things that we need to address in the agreement to make sure the client understands that that's not going to be part of your work. There may be work by third parties in your situation. It may be people outside of your control. These are some of the things you want to exclude. I'm not responsible for anybody else you bring into this property or bring into this transaction, like the home inspector or an appraiser or anybody else. And then there might be, like I said, exclusions for that particular job that go beyond what I've talked about. Because you deal with, it's like I used to say, I'd get a different case every day, and every case has its own things going on and issues that need to be addressed. It's the same for you. Every home is different. Every client is unique. Every client has different things they want to express about the house, and they want to make sure, that the staging is done in a way that agrees with what they want to do. All those things change. And so you need to be agile and be able to adapt, and your agreement needs to be able to adapt to that. And so that was also part of the thinking when we were drafting ours for this program, is we want to make sure that it's adaptable so that people can use it in every situation. So I want to talk a little bit about defensive clauses, because this is where I see the gap. I've looked at a number of different examples, obviously, as part of this process over several months of looking at different staging agreements that were provided to me for review. And in addition, looking at, the overall risks associated with what you're doing, and tried to come up with some additional ways you can insulate yourself from liability, even in some cases where you might be at fault. And I know that sounds callous, but the reality of the situation is, in order for you to be able to charge a reasonable price that people can afford for your services based on the risk you encounter, the trade-off has to be that you have to have some concessions in these agreements that insulate you from some types of claims, or claims that come up several years later for some reason. And so we want to make sure that you have these things built into your agreement. Now, some of these are state specific, and we have a firm handle on where you can use some of these things and where you can't. I'm going to talk about them generally, but understand, if you have a particular question about your state, you should feel free to send me an email after this is over, and I'm happy to answer it for you as to your particular state. But what we're talking about really are liquidated damages provisions, in defense and indemnity provisions, notice of claim provisions, limiting the time for somebody to actually bring a litigation or a legal action against you, and arbitration. And arbitration doesn't come up so much with your work, but I'm going to talk about it a little bit, because some people do use those clauses in their agreements, and I want to explain the pros and cons of that a little bit. Liquidated damages are essentially a provision in your contract that says that if there's any error on my part in performing these professional services, or if I breach this contract, that my damages, your damages available to collect from me, are capped at a sum. Now, most service professionals cap it at the cost of the services being provided. There's a whole host of states. There's about 20, I think we're up to we have about 28 states where we can use these in contracts. And what it does is, if somebody sues you, and, Judy was throwing out some numbers out there before with claims, and they say, well, I've got an $18,000 claim. Well, if the contract limits your exposure to the cost of your services, whatever that might have been for that particular job, even if you're somehow found liable, your damages, the damages available to that claimant, may still be capped at the cost of your services. And what that does is, I'll tell you, the first thing it does, plaintiffs' lawyers really don't want to deal with that. And so your client takes that to an attorney and says, well, hey, I had this service agreement with the stager, but I think they breached it and I'm out $18,000. And the lawyer sees that clause in there and says, well, wait a minute, you agreed in here that even if you had damages, they would be capped at the cost of the services. And, we're in Pennsylvania. And in Pennsylvania, we can enforce that provision in court. Now, like I said before, there's no magic get out of jail free card. Every contract is looked at for that particular case, that particular lawsuit by a judge. But if that law is upheld in your state, if states allow those in consumer contracts and yours is properly worded, we have a very, very good chance of being able to enforce that. So what that means for you is two things. Number one, you may have a situation there where the claim's capped at, let's say it's $1,000 for just to use round numbers. Your exposure might only be $1,000. Even if you get a bad claim, you're still insurable next year because your loss run at the end of the year on that insurance policy, even though you got sued, your damages were capped. And that enables you to, even when you have a claim, to not be, suddenly paying double or triple your premium because your insurance carrier had to lay out $18,000 on that claim. You're going to have clients that might balk at that provision. And you're going to have to decide on a case-by-case basis whether the job is worth taking the risk. That's a business decision that you have to make. But look, a lawyer worth any of their salt is not going to tell you not to take advantage of every single thing you can possibly take advantage of to insulate yourself and your business from liability. No single mistake should cost you $18,000 or $20,000 if it can be avoided. And whether it costs you or costs your insurance company, you end up paying the price for that down the road, whether it be a premium increase or maybe you're unable to get insurance because of a claim. We don't ever want that to happen. And so we want to make sure that we provide you with the best defenses you can possibly have when you get in that situation, so that if we have to hire a lawyer to defend you in an action, that they have every bullet in that gun ready to go. Because I'm going to tell you, when you get to that point of the game, it's not set up to favor you. You have to set yourself up. And this is the best way to do that in your agreement. So sometimes these are called limitation of liability clauses too, but the premise is the same. And if you have questions about whether or not that's enforceable in your particular state, by all means, feel free to email me after this. I've charted that many times. I stay up to date, very up to date on that because it's a critical defense. And so I can point you in the right direction in terms of your state and whether or not it's usable or not. Indemnity provisions are basically a provision in the agreement where the person signing the agreement agrees to defend you and indemnify you in the event of a loss. Defense and indemnity are really what we're talking about there. Defense is they agree to pay your legal costs to defend yourself in the event of that claim. And indemnity is what might have to be paid on your behalf in terms of a judgment. If you're in a litigation matter, if you're in an arbitration, they call it an award, or a settlement, whatever has to be paid out on your behalf. So for example, you might have a situation, and we put these in our standard agreements where, you're going in and performing a professional service, but you can't speak to conditions that exist in that house that are beyond your control that may be a safety issue. An open house is a prime place to have a slip and fall accident, or somebody tripped downstairs, or the railing was loose, those kinds of things. And because you're in the house and you're staging it, somebody could try to claim that you gave the client advice on how to present the house and that ultimately caused that incident. In that situation, we want to be able to limit your liability down to the cost of the services, because bodily injury is a much different animal from sticks and bricks. Damaged property from an insurance perspective, I might have some difference in opinion as to what something's worth. I might have an appraisal from one person and an appraisal from another. They're going to be pretty close. They're not going to be too far off. But a jury gets to decide what a bodily injury claim is worth. And there's no parameters for that. They get to decide it based on their life experience. So I'm going to give you a really crude example, but do you want the person who couldn't get out of jury duty deciding how much you should pay somebody for a back injury? That's the question you need to ask yourself, right? I can listen, let me tell you, from many years of picking juries, they have no desire whatsoever to be there, and they tend to side with the consumer because that's who they are. And people don't understand that businesses don't have a money tree out back. You know, people like you, I grew up in a family that ran a small business. That was our means of living. And I can assure you, people think that we just have access to money all over the place. And it's not true. And so we want to avoid bodily injury claims as much as possible. If we can make somebody else responsible to defend you, to pay the lawyer to represent you, and to pay any judgment or any payment you might have to make to an injured person, you're much better off in every respect. And so we want to make sure we do that. And more importantly, it's because the owner should have that responsibility. This is their property, and it should be safe for people to come in and out. And you shouldn't get sucked into that because you're the business. You know, maybe a homeowner's policy may not cover that client for that event, but that doesn't mean that you should bear the burden just because you're insured and your business is properly insulated against a claim. So I hope I didn't scare you too much with that, but understand, bodily injury, it's whatever that person decides it's worth. So I can tell you in Philadelphia County, where I did a lot of practicing, a back injury might be worth $125,000. I might go 20 miles away to the next county, and that case might be worth 15. And so it depends in large part on where you are. If you're in a city, the jury verdicts go way up exponentially in a city than they do it to somebody out in suburbia. And so keep that in mind, that you have to be insulated for where you work, not just what you do. In addition to that, one of the other things we try to utilize to cut down the time period that people can do something is we use a timely notice of claim provision, and also we try to limit the time that somebody can bring a legal action against you. With timely notice, what we want there is we want the client obligated to notify you as soon as humanly possible of anything that might be giving rise to a claim. We may, as your insurers and your risk managers, we might want to investigate that claim. And we might need to be able to get out and see the conditions as they are today, particularly if it's a bodily injury event. You know, we want to be able to get out there and photograph it and know what it looked like now, because litigation has a long shelf life. Somebody might file a case today. It might not see a courtroom for 2 years. And during that time, the conditions are going to change. And if we go out there a year later when you finally get sued and are trying to figure out what it looked like when the accident happened, we're going to be at a distinct disadvantage. And so would you. In addition, we want to make sure that the claim's brought timely to you so you can submit it timely to your carrier if you need to. And so that the provision we generally use says that if somebody believes they have a claim against you for whatever reason related to the services you provided, that they give you 10 days notice in order for you to be able to come out and see the conditions for yourself, or examine that piece of property that was damaged for yourself, photograph it, and preserve the evidence so that we can make sure that we can defend you later on, whether it's us or anybody else. Quite honestly, it's a good practice to have, and it's a good thing to have in your agreement. We limit time to bring a legal action because every state has a different set of what we call statutes of limitations, and that's a term of art that just means that's the time period in your state that somebody has to file a lawsuit related to a claim against you. Generally, you know, the claims we're going to see would relate to if we have a negligence claim, for example. Negligence means that somebody says you didn't do the job that a reasonably prudent stager in your area would have done given this set of facts. That's the barometer that a judge and a jury are looking at to decide if there's liability there. Well, it depends on what state you're in. A negligence claim may have a 1-year statute of limitations. It may have a 5 or 6 year statute of limitations in your state. That time period is way too long to have something hanging out there that might occur into the future and that might be brought against you in the future, way after, you know, you may have even ceased doing business. We generally try to limit the time period anybody can sue you to 1 year from the date your services conclude. And the reason we do that is because I've had difficulty over 22 years enforcing any time shorter than that in any state. And so the barometer we use, 1 year seems to be the maximum limit of time I can get a judge to agree to cap that time period. Because the other thing that happens with claims and statutes of limitations is there's the statute of limitation that says how long they have to bring the claim. But judges have what we call the discovery rule in the United States. And what that means is that a judge can set that period to start running from the date the client first realized they might have a claim. That can be an additional 2 or 3 years after the services were performed. And now that time period that might have been 2 years is now stretched out to 4 or 5 years. We need to preclude that as much as possible. There's no benefit to you to having somebody have ability to come back 3 or 4 years later and sue you for something out of the blue. And so we want to make sure that they have to bring that claim within a year. In addition to that, it helps to avoid, you having claims on your policy. Most people will, if it's property damage, we'll usually see that in a year, but not bodily injury. We might not see that for 2 or 4 years afterwards. And so we want to make sure that we can cut that time period down. So when they file that suit, the lawyer we hire walks right into court with motion to dismiss it.
Joe, is there a way to lessen that 1 year threshold? Because in reality, I was trying to think this out in my brain, but for bodily injury, if the house is being staged and it's obviously escrow hasn't closed, you haven't removed your inventory, nobody's hurt yet, would you be able to reduce that 1 year time frame down to, say, close of escrow or within 30 days of close of escrow?
So I've been thinking about that, right? Because I think about, your liability technically on 99% of anything that somebody might throw at you, whether it be negligence or whatever the case may be. 99% of those are going to end once that property is removed from the property and your people are no longer accessing the property, right? Then it's pretty much eliminated, other than somebody trying to make some claim that something you did staging wise prevented them from selling the house, right? Which, who knows what that might be and what claim that might look like. But most of your claims are going to be gone after you evacuate the property. My experience with judges in the U.S. is that they don't like to limit the time period under 1 year. But I think we have an argument with what you do and what your members do. It's a little bit different, and that maybe we can enforce that. So we have a whole group of states where you're not allowed to contractually do anything with the statute of limitations. And then we have a group of states where you're allowed. And it would be in those states where we're allowed to do it that we could take a chance at 6 months, or we could take a chance at 30 days and see if it would work. I can't guarantee it. But to be honest, we haven't litigated one of these contracts for stagers yet that we're going to be using. And so I'd be willing to go down to a time period that's more reasonable based on the service that we're providing. I'm just reluctant to tell you that, hey, look, we'll be able to enforce that. We won't have a problem, because I know judges. And even though they will purport to understand what you do and why it's important that we limit it that way in your particular contract, they're going to be thinking about the more global effect of that. And they might be reluctant to go less than a year. But I agree with you, Shell. It's more important for your line of business than it is for others.
Very good.
The last thing I want to talk about with the defensive clauses is arbitration. Some of you may use them in your contract, some of you may not. Arbitration is basically a way to avoid having to go to court for a dispute, that the client then has to bring the claim in arbitration. And the idea is that it's cheaper to defend, it gets done a lot quicker, and that you may have a better shake with an arbitrator than you would with a judge or a jury, particularly a jury who doesn't understand, right? We want to take that uncertainty element out of it. Arbitration has its benefits. It is sometimes cheaper. It is sometimes quicker. The bad side of it is you can't appeal it. If I'm in court and I have a judge who makes a mistake about the law, so let's talk about those liquidated damages for clauses, for example. If I have a judge that says, well, I'm not going to enforce that in my state, I have a way to go over his head or her head and go to an appellate court where I might get a judge that will agree with my position and enforce that clause. And depending on the size of the claim, that could be seriously important, right? I can appeal them and I have another shot. And if that appellate court makes a mistake, if it's a serious enough question, I might get it to the Supreme Court in that state. Arbitration, there's no appeal. So if the arbitrator that's assigned to the claim makes a mistake about the law, you're stuck with it. And so I'm very careful about using those in service contracts and very careful in how we enforce them, because the problem is once you put it in the agreement to the client, it's out of your hands whether or not they elect to use that. Now, most lawyers will tell their clients go to court. I actually would prefer that in a lot of instances because I like to have that checks and balances. But understand that if you have an arbitration clause in your agreement and your client elects arbitration, you can't argue against that. So once you put it in there, you have to assume that you're going to have it in every instance. That's why I don't put it into stock agreements, but I have arbitration clauses. If I have clients that have a strong feeling about using arbitration clauses, I have arbitration clauses for our people to use in their agreements that will work with arbitration service providers that are very reasonably priced, and they are very fair and they understand houses. The other thing I wanted to touch on with agreements is subcontractors. And I saw, as we were talking earlier when Judy was talking liability issues and things and coverages and the work comp issues, there were a lot of questions coming up about subcontractors. And I just wanted to take a minute because it's a really important part of risk management, is that it's not just you that is out there at risk. It's the people you bring to the transaction or who are working around you. When you have a subcontractor that's doing work for you on your behalf, you got to have a written agreement. And most insurance policies, now I'm talking about the E&O and the general liability, not the workers' compensation as much, but with the GL and the errors and omissions coverage, if you don't have a signed subcontractor agreement with that subcontractor, you're not going to get coverage if they make a mistake and you get sued because of it. There's a provision in nearly every policy form that's sold in the United States that says there has to be an insured contract. There has to be a written agreement between you and that subcontractor in order for a claim to trigger coverage under your particular policy. So there's that issue there. The other big issue is, the defense and indemnity provision, like we talked about with your clients. If you bring a subcontractor into the transaction and there's a claim related to that particular part of the services being provided, they can still sue you because you're still the captain of the ship if you brought them in, if they're your subcontractor. They're not just somebody you referred your client to and they made the arrangements with your client. This is somebody you brought to the transaction. You need them to defend and indemnify you if there's a mistake related to their end of the services. And if that's not in writing, in a written agreement, they don't have that obligation. In the usual course, when somebody gets sued, and it relates to a real estate transaction, whether it's a disclosure issue or anything else, we're going to have multiple parties to that lawsuit. And those parties, you have the plaintiffs on one side and all the defendants on the other side. And so in this case, the plaintiff's going to sue you because you were the person they hired, and they may or may not also sue the subcontractor. But let's assume they do. You're both in the case. If you want to enforce that agreement to make your subcontractor defend you and more importantly, make their insurance policy defend you and provide you with indemnity for that case, you got to have it in writing. Otherwise, their insurance carrier is not going to honor it. So it's critical if you're using subcontractors. I can't stress enough, you really need to have a written agreement with them. Now, that may take different forms depending on the service. I've prepared one that deals generically with the major issues that you should be concerned about on the risk management side. We have the defense and indemnity, the insurance requirement. It's fine for your subcontractor to tell you they're fully insured, and that's great, but you're not going to take that to the bank and you're not going to take that to the courthouse steps, Joe, because they may be wrong. Yeah.
Yeah, on the just on the front lines with insurance, I hear insureds all the time call me and say, well, I have a certificate of insurance and they named me as additional insured. And then I ask them, well, do you have a contract? And they say, no, they provided me a cert, and that's just not good enough. The contract actually supersedes anything else. They don't even need the cert other than to show them proof of insurance.
That's absolutely correct. The mere fact that there's insurance there, they can name you. You can get a certificate that shows you as an additional insured on that policy. But if there's no written agreement where that subcontractor has agreed in writing to defend and indemnify you on a claim related to their service, their carrier doesn't have to enforce that. Their carrier doesn't have to step in and cover you just because you're named as an additional insured. Every policy out there is going to have an insured requirement provision that says we're only going to defend and indemnify, in this case you, if there's a written agreement between you and their insured. And so that's why it's important that you make sure that they have the insurance. And listen, I'm going to tell you, I say this with a grain of salt, because understand, as a defense lawyer, nobody calls me when they have a great day, right? I'm not that call. I'm not that call when for you to say, my clients are awesome, they paid me on time, and everything went smoothly. You're probably not telling me that. You're calling me because there's a problem. So my world, my universe of knowledge is based on when things go wrong, okay? And I'm always going to work from that point of view. But there are people out there who will falsify these additional insured agreements. There are people out there who will lie to you to your face and tell you they've got you covered when they don't. And they may not have the assets to back that up if the insurance isn't there. It's important for you to make sure that you're buttoned up, and that the people you work with and that you bring to somebody's home, that you bring to this transaction, are going to cover you in the event they make a mistake. And so you need to have an insurance requirement in there in addition to the defense and indemnity provision. And in the insurance requirement, you can go as far as to tell them exactly what type of coverage they have to have and how much to be able to do work for you. Those are all things you can decide. You're the captain on that one. You get to decide who you work with, who you allow to make money off of your good work and your good reputation. And you certainly want to make sure that if there's a problem, that somebody is responding to that client so that you're not getting drugged through the mud and they're saying, well, they didn't even have insurance, even though they said they did, because they didn't have this agreement. And so they didn't have coverage when I sued them. That's not the reputation you want to have. And you want to make sure that your side of the street is very clean in that regard, and that you're buttoned up in any way you possibly can. Because the other thing I'll tell you is, it's not going to be your friend, the subcontractor, who's going to be making that decision. It's going to be their insurance carrier. And they're not all as nice as us. I know you're shocked by that. But they're in it, they're really in it just to make money. That's their sole purpose in existence. And so they're going to look for ways to try not to cover things. And subcontractor agreements, or the lack thereof, is a great way for them to do that. The other thing that should be in your subcontractor agreement is, you don't want these subcontractors picking off your employees or picking off your clients or your referral sources. And so you need to have some provision in there where they're not going to go compete with you. They may sour on you, and they're going to go find the stager who doesn't have the amount of business you have or the referral sources you have and say, hey, well, I was exposed to all those people. Let me make some calls. They seem to like me. And you don't have any way to control that, or worse, any legal recourse when they do that. So your subcontractor agreement should contain some kind of non-competition for your referral sources and your client base, and also non-solicitation, so they can't take away your good employees. And that's something that should be in every subcontractor agreement, because that's the only place you're going to be able to protect it. An employment agreement with your employee would contain non-compete, non-solicitation clauses, and that would cover you in that event. But with your subcontractors, it's not automatic that they're not going to take your business and run with it and go find somebody else that's going to pay them more money and expose them to your referral sources that you've spent your time and your good work building up. That was a lot of information and a lot of hot air from a lawyer that you probably, there's a lot there. So if people have questions, if this is a good time to take some questions about that stuff, I'm happy to, or I can move on. It's whatever works.
Let's move to the next slide. I know people are starting to ask about COVID-19, and then we do have one question about subcontracting. This is going to open up a can of worms. Diane, you might want to follow up later at another time if we don't have enough time to be able to get into everything, but I'm going to ask Joe quickly on this. I know the answers, but I'll let him answer it. She's asking, if you subcontract with another stager that's not on her payroll, and that they stage with her, how's to best be insured? And that, to me, opens the can of worms. Or if you're 1099 another stager, probably not supposed to be. They're most likely supposed to be a W-2 employee, and you're probably breaking a law, especially
if you're in California. Yeah, in California for sure, and we've all seen that one. And that's as you can imagine, it's not just stagers that are affected by that. It's everybody who does that type of work. And that's listen, the one thing you got to remember about California, as onerous as it is, what happens there and happens in New Jersey eventually makes its way to the middle.
Always.
And so you're going to see that's the trend. And that's why when we talk about the law and regulations, New Jersey and California are always mentioned as, well, they're going to be the outliers. Everybody who does something the first time are the outliers, but eventually that gets adopted and it becomes what's applied in all the states. So I think the days of being able to have discrete subcontractors like that, where you don't have to bear the burden of having them as an actual W-2 employee, those days are numbered.
Mm-hmm.
And so, in terms of that, that's going to be a problem. The specific question in terms of how they should be best insured, if they're doing staging work, they should be at least insured as good as you are. And maybe, a little bit more. But I would say to you that look to yourself. What is prudent for you to carry? They should at least have that, if nothing else, with all the other things I talked about, including the indemnity and defense and the other things that should be involved with the insurance part of that. I mean, look, I would push them to get more, quite honestly, but you can see that it's really, if they're doing the same job as you, they should be insured as well as you are.
Do you want to move on to the COVID?
Everything's available after the fact. It's being recorded. So we need our team to give us until next week. We usually get it out by the Tuesday of the following week. And right now, because this is timely, because COVID-19, as you can imagine, we are all pulling our hair out over this. So we should be able to get it done by then. But if it's another day or so, please be patient with us. We're working as quickly as we can. As you can imagine, COVID-19, what we're seeing, the issues take place all across the globe, and certainly in our staging community, we are also experiencing those things at RESA HQ as well. So not only are we trying to navigate COVID-19 for what decisions am I going to make for my team at RESA, my employees here that work to support you all throughout the week, what are we going to do about RESACon? How's everything going to work? All of that great stuff. And still, we're trying to curate information for our members so they can get some more specific information. And I've also been applying for exemptions to the essential services rule in different states. We're hoping we're going to be added to some. We just don't know. It's so hard to be able to get through and to communicate. So without anything else about that, COVID-19, let's talk about this and coverage as far as what viral coverages. I did not know there was even such a thing, or is it? Because does it exist? Because I don't think we have it.
So generally speaking, what we call it the SARS clause, and what I'm talking about now is business interruption insurance, right? Coverage that protects you in the event of something that happens that is beyond your control, that inhibits your ability to conduct your business. So most people, when they're thinking about the effect of COVID-19 and particularly these state regulations and shutdowns, think about it in terms of, I can't do what I would normally do. And in this instance, it's because the government has told me I can't. It's not that the economy is bad. It's not that I can't perform. It's that the government has told me I am not allowed to perform my service. And so business interruption would usually be the coverage that it would attach to something like that. But after the SARS outbreak, insurers decided that they would create an exclusion. And I can tell you that it's in every single policy with business interruption that I've seen that isn't some specific viral business interruption insurance. There's a clear bright line exclusion for anything related to a viral outbreak. And so this would clearly fall within the scope of that exclusion. And so that's what carriers did to insulate themselves after SARS, because as you can imagine, people made claims left and right. They're difficult claims to investigate in terms of the actual impact on the business without doing it on a case-by-case basis. So the insurance companies wrote that into their policies as an exclusion back when we had the SARS outbreak.
Yeah, just to piggyback off that, Shell, so what we've been discussing with the insurance carriers where they're headed with this, it always ends with this, and this is how we've been addressing insureds. I've been spending a lot of time on the phone with stagers who are interested in business interruption coverage, and Joe's 100% right here. but every single one of them, because every claim is a little different. If they really feel like you have a claim or some sort of loss, that you should still investigate putting that claim in and see how it is being ruled.
Yeah, I couldn't agree more. What we're telling our insureds on the commercial side, as you can imagine, we field this call every day now since February, when this was first becoming more prevalent in the news, and we're inundated with calls about this. And our advice always is submit the claim, because every carrier is different. Every carrier makes a decision. They have to make a decision on a claim by claim basis. And there may be something about the facts of your claim that may trigger them to think they have coverage there. And so our advice always is, if you have the coverage and you do have an impact, right? You aren't able to work, you can demonstrate a loss of income or a disruption in the business on paper somehow. I had these jobs set up, they were booked, they're all gone. Everything's canceled because I'm not allowed to do the job. If you can verify the damages, make the claim. If you're one of our insureds, we'd certainly be happy to do that for you, because that's our primary function, is to make sure that we're communicating with the insurance carrier on your behalf. But you should make the claim anyway. If you have the coverage and you have real damages, you should make the claim. If they deny it, they deny it. But the point of the matter is you don't know until they decide it. It's relatively a hot button issue. It may get handled differently. Certainly over the next 30 to 60 days, as these claims are really all filtered through, we would have a lot better idea. But generally speaking, I'm going to tell you, with that SARS exclusion in there, business interruption is very difficult to obtain, even if you have the coverage on your policy. That's all great news, huh? I'm always happy to be the bearer of great news.
On the upside, I mean, as much as it is, we do have, on the next slide, I've been talking closely with the carriers, and there is going to be, and these are changing every day, just as we're getting more information from the government. Literally, I changed one of them as I sent it to Shell later this afternoon, because that's how quickly they're changing. So in response, each carrier is approaching this a little differently. So you may see some relief depending on what carrier you're from with. Hanover has yet to really give us a clear response, other than they will respond soon. And I think if you have a billing issue, you should reach out to their billing center directly and say, hey, I'm having a problem paying my bill. I will try and update people as soon as possible. But CNA Travelers Hartford has come out with specifics that are listed on here, and they're not canceling and or charging late fees through those dates that I have listed. Travelers said they're working with people on a case-by-case basis. So although you might not have a business interruption, you can get some relief if you're paying a monthly bill on your insurance. And then lastly, there were some issues or some questions that people were having that Joe was going to address regarding contracts, if you are in the middle of having one right now during the shutdown.
The main thing I wanted to express to you is the concept that if you are unable to perform the service for something beyond your control, so if you're in a state where there's a shutdown order and you're not allowed to perform the service, you're not contractually obligated to perform the service. Somebody can't sue you for lack of performance when the government steps in and says, you agreed to this contract, we're not going to let you perform under that agreement. If that's the case, no court is going to hold you responsible for performing under that agreement until such time as the order is released. If you have to cancel the service outright, for whatever reason, it's just a matter of giving your client adequate notice. If it's one where you're going to say, look, everybody's shut down right now, we'll come back, we're going to do your job once we're able to work, then you don't want to cancel the contract, right? But if you there may be contracts that you have to cancel because you won't be able to do double work when you're finally allowed to do the work. You can only still do so many transactions. So it's a case-by-case basis, but generally speaking, the law understands that sometimes the government prevents you from doing things, and that they're not going to hold you to a consumer contract and force you to perform or allow a client to sue you for damages for non-performance when the government said you weren't allowed to do it.
Very good. Updates. There are many states now that have been put on your shelter in place. So Robin, in Washington, you are correct. Moving is considered essential in Washington. And just to give you a heads up, this afternoon, I actually sent a request in for stagers to be added to that particular list. Now, that doesn't mean that everybody has to stage. It means you still want to use common sense and good practices. The reason that I'm doing this for stagers, going state by state, as soon as I can track them down and find them if they have an application process, I'm trying to do this because we have so many stagers that escrows are still closing.
Yeah.
Part of the real estate transactions have not shut down because those services are being done remotely, and everything can be done online. So while escrows still close, you still have to get your inventory out. The new people are still going to want to move in, and they can't move in if your inventory is sitting in there. So what are they going to do? They're going to pull it out. They're going to chuck it in the road, stick it on the sidewalk.
They're certainly not going to be as concerned about your stuff as you would be. That's for sure.
Exactly. So what I'm doing is I'm trying to apply for as many states as we can to get stagers added to that, for the sure purpose that when an escrow closed right now, that you can actually get in, take your team. I've actually had to write protocols because the states have asked me if we've done that. So I have written some protocols of what is the best practice if you are still doing that. Things like travel with your team from point A to point B. Don't stop anywhere else. Travel individually. Hand sanitizers, squirting stuff, disinfectant, wipe it all down. Clean the house, wipe all the touch points down from the back of the house all the way out until you walk out. Disinfect your inventory once you get home. So state by state, we're kind of going as soon as they pop up and I hear about them, asking for that. But in Washington, yes, they are considering moving as essential. And if we can get staging, the words real estate staging added to the list, that's fantastic.
Heather Burns has a question that I'd like to address. She's saying that she's in California and she has workers' comp with travelers, and she's temporarily laid off employees, and she wants to know if without money coming in, should she consider canceling? And I would tell her that Travelers is one of the companies that's working with people. I would call them and try and make an arrangement. That's one. Two, what I'm doing for a lot of my clients is if you have a rather large payroll, I'd knock that payroll down to as low as you can. And they are accepting that, endorsing them, because you say, hey, all my payroll basically went. They might argue that on an annual basis, that's not fair because this is temporary, but I think a lot of them are making exceptions there. So I would call your agent. If it's us, call us, see if we can knock down the payroll. And then we can also work with the billing to see if they can make some exceptions, because Travelers' tagline is that they are basically making arrangements on a case-to-case basis.
And Heather, if you are with us, which I think you are, I might be able to move you to the new program and save you some money all the way around on that.
I would not cancel your comp, though, because once you have gaps in coverage, and we know we're all going to be back up working someday, that's not looked favorably by carriers. So if you can, by all means, try and not cancel.
Some people are asking me, do I have state by states yet? Let me just run off a couple of them that we have. Now, mind you, we just started doing this week. Monday, I was able to find some. Connecticut, I've applied, and I had an interview today with them on the phone. It went really, really well. And if she relays the information like I suggested she did, keeping our fingers crossed, will be added to that list. Illinois. Illinois, moving and relocation services are considered as essential. New York applied for the exemption. The state of their state right now, I'd be shocked if we got a response from them, but I did apply. Ohio, moving and relo services are included, or they are essential. Pennsylvania, we applied for the exemption, and Washington, we applied for the exemption. So that's it.
And I can speak Pennsylvania particularly because I live here. I've also made requests for exemptions for a few clients, and they do have a pretty good streamlined process to handle it. And they are really trying to get back to everybody as fast as possible.
Yep. Kathleen, I know, I think Texas just went on lockdown this last couple days, I believe. So I don't have it yet. if you happen to, if anybody in your state has the order from your particular state and you send that to me in an email, I will add that to my list. And that will, what that'll do for me, it's going to help me just cut down my research time, that I don't have to go to Google and try to track everything down on my own. That'll just cut up a lot of time for me. And I'm happy to, once I get to that page, to read their statute and read, everything and put it together, put it in a spreadsheet and see what it is that I can do for you. I'm happy to do that. Lisa, in California, unfortunately, right now, staging is not listed as essential, and they do not appear to have any type of form or email that I can send to request it. If you want to get on their website and dig around a little bit and you find one, please send it to me. I'm happy to apply for that as well. Monica's in New Jersey. She's saying the second highest of COVID-19. I'm old.
I'll tell you, my parents' home inspection and stage all went off this week though in Surf City, New Jersey. So people are still working. I'm not sure. I thankfully I don't have to advise the home inspectors and people in that transaction of the legalities of what they're doing, but yeah, they are still working.
Monica in New Jersey, if you guys have an order, you need to read the order to tell you what it is that you are allowed to do. If you need help interpreting some of that, send me the order and I will help you. Mass is only, essential only. Same thing with Mass. Chess, I reached out to Illinois, and Illinois says moving and relocation services is essential. Jennifer, I don't have the links yet for Indiana. I just heard about them last night. All the other ones I already went over. I rattled these guys off, everybody, so I'm not going to go over them again just for time. But if you are not on some in a state that I didn't list it saying that it was essential, send me your state's order. Email it to me, shell@resa-hq.org. And oops, I just really butchered that email. That first email was not correct. But if you send me the order, and if you see online where they have an email to have it added or to ask for an exemption for it, send that to me as well if you happen to find it, and I will dig into that for you guys.
One good place to look if you are checking in your state, the state attorney general's website will usually put that up relatively quickly once an order is released by the governor. The governor's office, certainly, a lot of times you'll be able to get access to those right away. And always, with anything related to this, just be careful of where you're getting the information.
Yeah, for sure. That's the other thing with COVID-19. I cannot express enough to everybody. Please only share credible information. Man, I'm getting all kinds of lunatic stuff from people that I'm like, why would you send that? So here's a tip for you. If you got a video and it's talking about COVID-19, but the B-roll, that's the video that plays in the background, has something from NASA on it, pretty good chance, and it's a computer voice, pretty good chance it's not valid information. Yeah. The CDC, the World Health Organizations, things like that, and your government websites, those are all very credible resources to be able to use. But all these little chain things that are moving around, and obviously the drink bleach one, no, I don't think anyone's I hope nobody sends that one to me. We hope that won't happen. But all the other crazy little things, if it doesn't sound right, it's probably not right. So make sure that you consider the source of which it is that you're sharing before you share that. That'll also help keep kind of the panic down. For sure, keep posting in all the groups. If you find credible information, please put it in there. We will keep up on the shelter-in-place exemptions and see if we can curate that information. My team is working really, really hard right now, but like I said earlier, we're also trying to take care of RESA, just our day-to-day operations, in addition trying to provide support for over 2,000 other members. So if you want information and you're wanting it quickly, for instance, the new stimulus plan, if you're listening to the news and you're seeing that something's coming down the pike, I have to curate that information, which means I have to go out, I have to find it, I have to verify it, I have to read it, I have to make sure that it looks good for what it is that we need to send out. Then I have to send it to you guys. And many, many eyes see it. So if you create a Google alert, like new stimulus plan, as soon as that hits the airwaves, the internet, boom, you're going to get that in email a lot quicker than I will be able to get it to you. So do that. In the meantime, we're going to continue to curate all the information to make sure there's credible data out there for everybody. I think we have really gone we've gone 2 full hours. Wow, we went 2 hours.
That's what happens when you let an attorney just talk. I love the sound of my voice.
Yeah.
That's so funny because I can keep everybody on for 2 hours, not a problem. I can yip all night long, but I'm shocked that we went that long.
Here's some phone numbers and emails for you guys too, for some of our information.
And so anything claim related or related to any of the stuff I talked about, if you send it to that email address, Victor and Judy will make sure that I get it and so that I can respond to you.
Yeah, and I'm typing this in now as I've seen it. So again, California, you are not essential. I'm going to rattle this off one more time before we hang up.
Yep.
Of the information that I have thus far. It may not be complete. So if I'm missing something, don't tweet me. It's okay. We'll all work it out. Connecticut. I interviewed with them today. I have filed on behalf of all of our members in the state of Connecticut. It went really well, keeping my fingers crossed. Illinois, their critical trades consider moving and relocation services as essential. New York, I've applied for staging to be essential. I have not heard back other than that received my application. Ohio, they also have moving and relocation services as well. Pennsylvania, I've applied for the exemption, and Washington State, I applied for the exemption today. Again, everybody else, if you've been put on a shelter-in-place order for your state, and that's not something that I've listed, send me a link to the order, and I will take a peek at that and see if there's anything headway that I can do. Team Judy, Victor, Joe, thank you so much for being on the call. Any final words?
Listen, we're all in it together, but like I said, if you have questions related to the risks or if you have questions about some of this that came up, feel free to reach out to us. We're here to help you. And that's our primary goal in everything we do. Even if you're not one of our insureds, you have a question, give us a call. We're happy to try to point you in the right direction. And Shell, thank you certainly for allowing us to do this. Like I said, there's no better resource for us than to have access to the members and be able to hear from them and talk to them. And so much appreciated for having us on, really.
Oh, absolutely. I so appreciate you all for doing this. I mean, this RESASURE program, I'm super proud of Judy for everything it is that she's done for us over the last, 10, 12 years. This program is even better. I get calls every single day of the week. I need a contract. Shell, what can you do for me? Well, I'm not an attorney. Should have been, but I'm not. Just saying. So this is amazing. And for only $95.
Don't do that to yourself. Come on.
Yeah.
I'm telling you, I would really take that.
There's a lot of mileage on that. Yeah, no.
I can just picture myself being up there. I'd be like the female Matlock. I'd be into it. So I really appreciate everybody jumping on board today. This was a great panel. I appreciate all the work that you've done. This is the team to be able to help you with your risk management and your insurance needs. Again, just a small, super quick recap. RESASURE is the risk management. That's about looking at your contracts, looking at your insurance, making sure you're properly insured. It's about preventing disaster so you don't need an attorney to help you dig yourself out of it after the fact. And then the insurance side is insurance. You need your general liability. You need your errors and omissions. You need your professional liabilities. Those are the things that you need. So if you are staging a home and you take a piano and you shove it through a plate glass window, true story, absolutely true story, then you're covered for that. But there's these other programs, these other services is that you can look into getting. So again, the SDO is Stagers, Designers, and Organizers Pro. What their program is, they get discounts on BOP and professional liability. They get a claims hotline. They get an email newsletter, subcontractor agreements, and professional contracts for their state. Also, with the RESASURE, you're going to get all that. Plus, you're going to get a current contract review if you have one, podcasts with Joe, exclusive Joe contracts, content articles. Sorry, I can't see. I'm so old. And Joe events as well. And so that's only $95 a year. It is not a month. It is not a per time or anything along those particular lines. Now, no, we cannot give the slides, but there's a replay. So this is being recorded. Give us until Wednesday of next week to be able to get that out. If there is a delay, please be patient. COVID-19 is sucking up a lot of our resources, and my team is working as quickly as possible. At the end, this is where I usually say, hey, thanks for joining us and see you at RESACon. However, if you haven't gotten the memo, RESACon has been let's just say it's being altered this year due to COVID-19. We're hoping restrictions get lifted for everybody, and it's something that we could have been able to do in July, but the bottom line is nobody's going to buy a ticket right now with what's going on. So we're not going to have an in-person event. I'm working right now to be able to have a virtual event and some options for people to be able to get a refund. We're packaging some different things together. We hope to get that out in the next couple days as well. Thank you again, panel. Everybody else, thank you for your evening. We appreciate your time. Until next time, happy staging and stay safe.
Thank you, everybody.
Bye, everyone. Thank you.
Bye-bye.